some things actually different for traders to understand, mostly for beginners. There's some things that you need to have rather in your psychology when coming into trading. Every field actually has a profession. Now, whereby we talk about beginners traders and we talk about advanced traders. There's some things that the pros know that the beginners don't know. Now, I'm going to be outlining some of them in this video. Now, as you here to subscribe to this channel and you haven't done so, you can just hit the subscribe button below and also like and share this video. Now, one of the things that you need to know as a beginner trader is you need to be prepared to lose money. Yeah, you don't just come into the market and think that you're the boss, because don't forget I made a mention of something in my one of my previous video. I say, in charge of price movement. Okay, and for that reason you have to be willing to lose money. Now you need to be wrong 95% of the times more than you're right. You need to understand that thing. Okay, now why coming out as a beginner, I used to do something. I used to think that I'm always right in the market, based off the fact that I already know what the market is supposed to do and what already understand that the market has a way of playing out. I was thinking that my knowledge was going to give me the money. Yeah, it will. It will. It will definitely give you the money. But the difference is, I know you may be asking yourself, is how do we make the money when we think that we have to be wrong more than we're right? Now, this is where risk management comes into play. Take for example, you're placing a trade. You're placing a trade, and today you risk your entry, and your risk was actually 2%. Now you risking 2% in a trade will enable you stay longer in the game, because why? If you're risking higher than 2%, for me, I think you're going to be blowing up your account as soon as possible. So you're going to be blowing up your account. But if you're able to manage 2% in risk in a trade, now you're able to risk more when you find out that your trade goes against you and you find out that you are wrong in your analysis. Yeah, like I said, we learn from the market every day. So there's every possibility that you might be wrong in your setup. So you playing out a trade and the market goes against you, there's no problem. You can risk more in that day. But whereby you're risking 30% of your account and the market goes against you, you find out that you are down, because why? You cannot actually place more trade. Place more trade in your entry, because why? You got to discover that you're risking high and it has a way of affecting you. Now, before opening a position, you need to ask yourself a question. The next one is, how much are you willing to lose in a day? Yeah, the pro traders do this. I'll tell you one of the secrets. I read it in a book. I saw it sometime in a journal. And the guy said something. He said, I'm always willing to risk 5% of my entire capital. 5%. Say for an example, I'm having a $1,000 account. I'm willing to risk 5% in a day. So once I'm able to hit that target and I make losses up to 5%, I'm out of that trade and I'm out of that day. I'm going up to do something else, to come up and trade the next day. Now this has an advantage. I'll tell you, it brings discipline into your trading analysis. It brings discipline into your trading analysis, whereby you find out that when you lose money for that day, the next day you are able to recover from that losses. Now, okay, let's break this down. Let's say you have $100 account and you risk 5% in a day and you blow up that 5% of your trading account and you're left with $95. Now, the next day when you're able to come to the market and say, okay, I want to risk 5% again, and peradventure the market moves to your favor, you find out that you're able to make back that $5 back to your account. I'm just giving a scenario now to recover from that losses easily. Okay, like I made mention, you might be wrong. There's no problem. There's no need to beat up yourself because you find out that your market went against you, and check what's wrong and what happened that the market moved against you. Okay, there is no problem. Now you find out that you're able to recover those losses. Whereby you're risking 30% of your account, you find out that the next day that you're able to see the market move in your favor, but you're making up the money that you lost yesterday. Now there is no profit for today, because why? You're covering up your losses for yesterday. Guys, that's not the way to trade. That's not the way to move forward. I was doing that as a beginner. I got to find out that I was like, first was not for me. Yeah, first wasn't for me, because why? I was always losing that money. And the money I was losing out in this scenario was the kind of money where I was making 30% of my risk. I wasn't even calculating my risk for the day. I was just losing out money and just like that. Now, another thing that you need to put in yourself is ask yourself a question. You have a knowledge. Now, don't forget, Forex is basically from knowledge. Now, from the knowledge, you move to application of the knowledge. Now, the application of the knowledge is when you come to the market and begin to see the market move the way you were taught the market will move. Now, don't forget, some of us started from the scratch like me, where we had the knowledge, and when we got to the market, we got to know that the market was a different thing entirely from what the knowledge was saying. But after all, we were able to find out our place and see that, oh, okay, this thing is moving. This is what they taught us. This is what's happening. Now, this is the application of knowledge, where you look for the way to apply that knowledge that you've gained in the market. Now, let me tell you a secret. Let me tell you a secret. There's something about the market. Not every market moves according to the knowledge that you have. Now, what I mean is this: you have to look for the market that respects your knowledge. If you want to be profitable in the market, you have to look for the market that respects your knowledge and trade off of the market. Now, when I was doing that research, I got to do a back test. Now, how do I back test? Some folks don't know how to back test. This is how you back test. You go into the market and go with your strategy. Your strategy is your trading condition for the market to enter the market when the market comes to your area of value. Now, what you do is this: when you get involved in the market, take your strategy along with you and do a back test and see if that market respects your knowledge and see if that market respects what you know. Oftentimes, you'll find out that 90% of the time, most of the market doesn't respect it. Now, all you have to do is find those market that respects your knowledge and stick to it. Now, for me, I was doing that research and I loved gold. I'm giving myself as a case study here, but I got to find out that gold hardly respect my strategy, though it respects it. Now, get my scenario now. What I'm saying is, some of the market respects your strategy, but oftentimes they hardly relate with what you know. I was in love with USD, Swiss francs, and odd USD, but mainly I actually love gold. Yeah, but I got to find out that for me to trade gold, I got to find out that my strategy was not respected all the time in gold. But odd USD and USD Swiss francs actually relate with my strategy and my belief system in the market. So I was like, okay, guys, I think I'm going to be sticking close to this market that respects my strategy. Why am I sticking close? Because I got to find out that success is based off of routines. Now, if you see any man that is successful, the man keep repeating that thing that makes him successful. Now, you're not expecting to trade the market whereby the market doesn't give me the kind of result I'm looking for. No, I wouldn't do that. I wouldn't do that. But there are some times where odd USD and USD Swiss francs is not in an area of value. It doesn't give me what I want. I wouldn't trade. What I would do is I would go to look for another market, another currency pair that actually relates with my strategy. Now you see what I'm doing. I'm actually trading my belief. I'm actually trading my strategy. I'm actually trading the knowledge that I have in the market. That this is what I know will happen. This is what I know will happen whenever this happens in the market. So that is one of the ways to stay close to it. But I got to find out that I was struggling. Guys, whenever your focus is on the money, I got to find out that you actually lose money. Yeah, money is not the first thing that should be in your mind when it comes to trading forex. Now, there's liquidity everywhere. My boss will always say that there's liquidity everywhere, but there is something that is actually meant for you, and that's your strategy. And when the market comes to you, it's actually asking you, do you wish to buy at this price or do you wish to sell at this price? So going to trade every market, I see some persons open folks like some folks open trade like odd USD, USD Swiss francs, Japanese yen, GPJPY. I was like, how do you monitor all these trades? Like, how can you monitor all these trades? It is better to become a professional in one trade than actually in one currency pair than actually become a not a professional in all the analysis, because while you're trying to look for money. I've actually said that running after the money is not the thing. The major thing that you need is to get a tool. Is that tool that give you the money you're looking for. And in this scenario is the strategy and the market that respect that strategy. It's what gives you the profit you're looking for. Now see what happened here in odd USD. Odd USD has actually been in this channel for a while. Sorry. Okay. It's actually been in this channel for a while. I know some folks actually trade in this channel. This is the 4 hours. But what I was doing was I was watching what was happening. Yeah. It's better off safe that way. It's better off safe that way because if I get involved in this zone here, I don't think I'll be respecting what I know. The major thing in the market I've got to find out is your mental capacity. Now, you see that you called mental capacity is actually that thing that actually helps you become profitable. How do I mean? Now let's take for an example. You know that you are a trading trader, and this market is actually on this channel, which is a continuation channel, ascending channel, but actually you decided to trade on it because you wanted to scale. Now, there's nothing wrong with it, but let me tell you something that I know. In as much as I'm concerned, there are two things that actually made you to enter that trade. Number one, greed. You wanted to make money. Or let me make it three. Two, impatient. You cannot wait to see what the market is doing. And the last one here is uh what will I call it now? Going against your strategy. Yeah, you're going against your strategy because you wanted money. You're becoming impatient because you wanted money, and greed also because why? You want to make small, like some guys. Let us get the small money from this thing and see how far we can go. See, guys, I've got to understand one thing about Forex. It's not really about the money. It's about what you believe that is making you successful. Because why? The guy said something. I think Kojo said something. Kojo said, "Hey guys, I'm not actually after the money. There's one thing I'm after. I'm after building my strategy. Now, how do I build my strategy? I can become patient in a month and see my trade play maybe twice. But whenever I see that opportunity, I risk. Yeah, I risk high. That's his own belief, and that's true because I got to find out that some of the time there are some months that there's no strategy. Yeah, there's no strategy because why? You are actually waiting for the market because the market is actually in a range or actually moving in a pattern, a chart pattern. So you actually wait for it to happen. There is nothing wrong with that, but there is something you need to understand. You need to trade what you believe. It's that thing that believes, that thing you believe in is what will give you the money.